Okay, let's get more on what Canadian industry can do to prepare for this looming tariff war, trade war. Our guest is Jason Myers. Now, we know him well because he used to be CEO of the Canadian Manufacturers and Exporters. Right now, he heads up an outfit called NGen. Thanks very much for coming on the show, Jason.
You're welcome, Andrew. Great to see you again.
Tell us very quickly what NGen does, what kind of an organization it is, please.
So NGen is a industry-led organization, Next Generation Manufacturing Canada. We raise money from a variety of public, private sources to invest in world-leading advanced manufacturing capabilities here in Canada, and do everything from promoting the great technology, research, and manufacturing capabilities we have and skills that we have in the country, to building collaboration, and that's key if we're going to succeed now and drive better performance in Canada's manufacturing sector going forward.
Now, you say that we hear a lot about what Canadian manufacturing should do, get rid of internal trade barriers, streamline regulations, yada, yada. But you say that's we've heard about that for decades. Those things will take a long time. There's some short-term stuff we should be doing right now. Can you give us a few examples, Jason?
Yeah, how can we help manufacturers diversify into new markets? We're leading 220 advanced manufacturing companies to the Hanover Fair at the end of March. This is the largest industrial technology show in the world, and it's a great opportunity to showcase all of the great technology, all the great manufacturing capabilities we have here in Canada. That's something that's very practical and that we can start doing. But manufacturers also have a great opportunity now to invest in technology, to pivot into new lines of business and new product lines, as they did 5 years ago, to diversify not only their exports, but also to diversify their product lines here to displace American imports. And I think, we can start with a very, very simple product list. What do we import here in Canada? We'll have that list ready on our website by the end of the week. But I think very simple things like that give manufacturers, give our technology companies an opportunity to identify where they can grow, where they can put their investments in order to basically take this opportunity to grow their business going forward.
I suppose our low dollar makes them more competitive. I know that may be a short-term thing.
Well, a low dollar does make it more competitive. It makes those U.S. tariffs a little bit more terrifying. But at the same time, it poses a problem for many companies that are importing product. It's very difficult to change their supply chains overnight, of course. And so we're going to be paying probably counter tariffs if they are put into effect on top of a depreciated dollar, which means that we're going to be facing a lot more pain potentially than our American counterparts. So we have to be careful around that. Maybe look at opportunities, for instance, to provide some form of tariff relief or tariff rebate or tariff credit for those companies that are investing in new technology to take advantage of these new market opportunities that are opening up, because American imports will become much more expensive here in Canada.
Yeah, that's interesting. So you say we should be wary of tariffs that we slap on stuff we bring in from the U.S.
Yeah, in some cases we're able to substitute those products. Look for apple juice instead of orange juice, for instance, which has often been used as an example. But that's much more difficult in the manufacturing supply chain. It's much more difficult to change your suppliers and especially do this on a dime here. So while there are opportunities to substitute those imports, and many Canadian companies can step in and look at being able to produce these products, that's not going to happen overnight. And so, I think in the short term, we're going to be facing higher input costs in our manufacturing sector, and that, of course, is going to take away the money that many companies need to invest in new technology to improve their competitiveness, in the innovations they need to go into new product markets, but also their ability just to stay in business in many cases as well. So let's not forget that these these counter tariffs are going to impose a cost on Canadian manufacturers that many are just going to find it very difficult to manage.
I sometimes wonder, though, if you deciding to go into manufacturing, it's pretty tough. It's capital intensive. You're up against global competitors. It must be tempting to just invest the money in a fintech company or designing apps or something that's asset light.
Yeah, but we've got one of the best manufacturing sectors in the world. When you look at the research, the technology, as well as manufacturing capability and the skill sets of the workforce here, there aren't very many other countries in the world that have the assets that we have. And we're seeing manufacturing change. We're looking at biomanufacturing, at manufacturing micro devices, precision manufacturing that is also combining services and much more customized products. And that's where the value is. We don't compete on high volume manufacturing. Leave that to the Americans. We compete on the basis of high value manufacturing, short production runs, lots of service. And, that type of manufacturing, the high value manufacturing, the manufacturing of products like aluminum that nobody else manufactures, that's going to keep our export markets regardless of the cost. We were talking before about the impact of inflation. Well, if you can't substitute product, the only thing that you can do is pass those costs along to your consumer. And that is going to be inflationary south of the border, as well as here in Canada.